Welcome back. I'm Jeremy Szafron. We start today with a hard dose of reality. According to a new report from Challenger, U.S. employers have announced 1.1 million layoffs just this year alone. Now, that pace we haven't seen since the 2009 recession. At the same time, the FAA has confirmed it's cutting about 10% of its flights at 40 major airports, not for weather, but because air traffic controllers are working without pay. So we have recession-level layoffs, and our core infrastructure in the U.S. seems to be seizing up. And this is the backdrop for our guest today. To help us make sense of all of it, we're joined by one of the sharpest voices in gold and macro sound money. Dominic Frisby is a financial author, commentator, philosopher of sound money. He's one of the only financial guys who can successfully moonlight as a stand-up comedian as well. He's the author of Bitcoin, The Future of Money and Daylight Robbery. His brand new book is A Secret History of Gold. Fantastic to see you, Dominic. Thanks for this.
Well, thank you very much for having me, Jeremy. And as you can probably tell by my accent, I'm probably not the greatest authority on everything that's going on in the US at the minute, but I'll do my best to interpret it.
Yeah, no worries. I mean, it just comes to the macro thesis. I mean, the data that we just talked about is not very funny. It feels like the floor is almost dropping out, and we're showing this gap between investors and non-investors, showing just how divided the economic reality has become. More to this, though, I mean, I'm curious, does this structural strain kind of validate the sound money thesis that you've written about for decades?
Well, there's been this gap between Wall Street and Main Street, and it's been going on for decades. And obviously, Donald Trump wants to, reinvigorate US industry and so on and revitalize Main Street. And Scott Bessent's talked about that as well. But it's not something that can be done overnight. And even with very favorable policy and very favorable taxation, this is a process that's going to take 10 years at least, and a lot of inflation, I dare say, along the way. And so it's a very difficult process. I saw yesterday somebody shared a chart which showed the growth in the stock market against the growth in employment over the last 20 years. And the two sort of go up together. But as soon as ChatGPT came along, employment growth actually subsided and fell, even though the stock market carried on going up. And this is another problem that the US has, in fact, the whole of the rest of the world has, is the impact on AI on jobs. I'm sure your viewers all know this, but just things like transportation. As soon as more cars go self-driving, and particularly trucks, the impact of this on employment is just going to be huge. I mean, I'm a writer and I use AI all the time as a sort of tool, and I think it betters my writing. But sometimes, part of me is going, why don't I just get AI to write this whole article and pretend it's me? I would have no integrity if I did that. But there are plenty of people out there doing it. And, it does a pretty good job a lot of the time. And so if it can make me redundant, it can make a lot of other people redundant. And this is what's simmering underneath the surface, even though it might make the broader economic numbers look good because of increased productivity and so on. Beneath it, the individual guy on Main Street, even with favorable policy from Donald Trump and the reshoring of industry, if AI and robots are doing all the work, does it make any difference?
Yeah, well said. And I mean, we can connect this to your work in your book, Daylight Robbery. I mean, you argue the state's power is built on taxing labor. If machines replace taxable humans, I mean, this report that we talked about off the top, this Challenger report, is a game changer because it specifically cites AI for 31,000 of the cuts just in October alone. I mean, the state isn't just losing its labor base, it's losing its richest tax base. How does a bankrupt, state survive without forcing a mandatory kind of CBDC, as you talk about it, as a new inescapable tax collection grid?
Well, this is a huge, huge theme, and I don't see many people talking about it. And I'm delighted you asked that question, Jeremy. Our tax systems are designed around a different age. They're designed around the industrial age, physical labor, physical goods and services in locations where you control the border. One person goes to work in the same place and you tax that person. One factory produces goods in this place. There's a border here, you tax at the border. But the digital economy, which is, I guess you'd say it's 30 years old, something like that, maybe a little bit more, but it's where all the growth is. But when you look at, Google, where is Google? Where is Starbucks? Is Starbucks where the actual shop is, or is it where the IP is, or is it in Holland where the companies, where is it? And this goes on. And tax systems have struggled to adapt to international corporations, international digital corporations. But when labor goes digital as well, 50% of tax revenue around the world derives from the taxation of labor, income tax. 50%. I mean, that's an extraordinarily high number. And that's because previously labor has been easy to tax. But there are two huge themes here. First is, I'll ask you this question, Jeremy. Do you know what the fastest growing workforce is in the world, aside from robots?
Tell me.
It's the freelancer, contingent workers. And it's been proven repeatedly, a freelancer, a contingent worker, somebody in the gig economy doing the same work as somebody in full-time employment pays a lot less because taxes are harder to collect after the event when there's declaration. There's all sorts of ways by people. Sometimes they're accidentally non-compliant. Sometimes they don't realize they have to pay taxes. A lot of the time they're deliberately non-compliant. And the gig worker is much harder to work than the guy in full-time employment. So that's one huge challenge to that income tax revenue. And there are some estimates that as soon as 2030, something like half the US workforce will be contingent. I mean, it's that rapid, the transition. And then on top of that, you've got robots doing the jobs previously done by humans. And so you can't tax the robots in the same way that you can tax humans. Bill Gates at one point was talking about a robot tax. But this is another huge theme. And we're already seeing if you think the US is bad, you should try coming to the UK to find a government that is spending way, way, way beyond its means. And it's compensating for the difference in tax revenue and spending by increasing the deficit relentlessly. And it's covering some of that with debt. But it's just creating this huge ever-growing problem. I remember when I first looked at this, US debt was $4 or $5 trillion. I looked the other day, it's more than 30 trillion. It's just extraordinary. The numbers are so big. And I thought it was all unraveling in 2008. And it's somehow carried on going because governments don't live by the same laws as ordinary businesses and households. But there is this huge challenge because the biggest source of government revenue, income tax, is drying up. And you don't see governments are very slow to adapt. They're not like businesses that are operating in a free market. They have to adapt to stay alive, or even workers. Government systems are much more slow and laborious. And rather than change the way they operate, either by spending less or redesigning the tax system, they tend to just get more aggressive in the path that they were already on. So you'll just see the more aggressive collection of taxation, higher tax rates and so on. And that's what we're seeing in the UK, less so with Trump and so on, because he's more of a low tax guy. But even so, if you compare Trump levels of taxation to what you paid 50 or 100 years ago, it's much more than it used to be. But I repeat what I've said, the biggest source of government revenue is under threat. And very few people seem to be addressing that. And it's a huge theme.
Okay, there's two places I want to take that. I want to finish up on the CBDC because obviously we're seeing some of these, wealth taxes, digital tracking, and it feels like the central bank's piloting more. But before we do that, I mean, you said that the UK is even in worse shape than the US fiscally. I mean, the Britain's debt and tax burden are strangling growth faster than Americans. Why is the UK breaking down sooner? Is it simply smaller scale or decades of policy that kind of punished productivity and rewarded debt?
It's decades of policy, decades of decline. I mean, I think we kind of reached our peak relative to the rest of the world in maybe 1913, just before the First World War. That's when we were top dog. And it's hard to believe now that, we had a bigger economy than you guys did. And we can't even, I think our GDP per capita is now lower than Mississippi, which is your poorest state, I think. It's just hopeless. And we've got a left-wing government and it believes the answer is to increase the tax burden. And increase government. It actually believes that government grows the economy and government spending grows the economy. It doesn't. It just reallocates existing wealth, and it takes the allocation away from wealth creators. We have the highest exodus of millionaires in the world, in the UK. It's extraordinary to think this because we're not nearly as populous as China, but we have more millionaires leaving than China does. That gives you an idea. Everyone who's leaving can, and so. it's well known that those in the top brackets of tax usually pay the most taxes relative to everyone else and share a much greater burden. But if those high taxpayers are all leaving, it puts even more pressure on the middle classes. And we've got our elite leaving, and meanwhile we're just importing loads of cheap what do you call it? Unqualified labor at the bottom of the scale. So we're literally replacing quality with trash. I mean, don't quite mean to use those terms; they're a bit extreme, but you know what I mean.
But I hear you, yeah. And I mean, getting on that point about the UK, I mean, doesn't that mean that the US isn't far behind? I mean, the same addiction to deficits, same inflated asset base, just with the reserve currency privilege delaying the reckoning?
I would say you're about 50 years behind us. And when I say behind us, I mean, I sort of talk about Western Europe as a whole. We're just so badly in decline, and there isn't the same culture of business and entrepreneurial spirit that there is in America. When I go to America and somebody does really well, other Americans are all like, yeah, well done, great job. Whereas here in Western Europe, people are resentful. And there's just a difference in attitude. There's much more of a go-get. The American dream is still alive and well. It's still got the biggest economy in the world. I expect if you said to most people around the world, where would you like to live? Most people would say the US. I still think the US is the best country in the world. It's the most exciting. Your economy's huge. But you do have grave problems, many of which can be sorted by a sounder monetary policy and smaller government. But, as Elon Musk discovered, basically the most capable individual on the planet, shrinking government was beyond even him.
So if, I guess we could get back to, I mean, it doesn't the dollar reserve currency status just by time then? I mean, if we're talking about this, it doesn't feel like it's immune to the situation. If the US is replaying Britain's post-empire decline with a half-century delay, I mean, what's the trigger that ends the grace period? Is it a bond revolt, a currency reset, or the loss of global trust?
Well, when you issue a currency backed by gold, it limits government power because it can only issue as much currency as it has gold. It can issue debt as well, but it just limits what government can do. But unfortunately, when money isn't tied to anything, it just enables the relentless expansion of the money supply. And when one body has the power to create money at no cost to itself, it is inevitable that that body will grow disproportionately large within a society. And it is an uncontrollable monster. And while government has control of money, the money supply will carry on growing. The government will carry on growing at the expense of the rest of the economy. And you can't hold it back. Even Elon Musk can't hold it back. The only way you can trim government is sound money. It's that simple, and doesn't matter if you're Ronald Reagan. Even under Ronald Reagan, government grew. It just grew at a slower pace. Mm-hmm. Same with Margaret Thatcher. So that's the problem. And now it might be that the answer to this lies in gold, or it might be that the answer to this lies in Bitcoin. And I'm happy to see, your administration. I wrote the first book on Bitcoin in 2014. I found out about Bitcoin when it was 22 cents in the UK. Satoshi Nakamoto wrote in British English. He cited the Times in the Genesis block. There's a very good chance that Satoshi Nakamoto was English. Even if he wasn't English, he was certainly an Anglophile. Now, we had a huge advantage with Bitcoin. And then our Financial Conduct Authority, which is, I suppose, the equivalent of your SEC, came along and regulated Bitcoin and made it impossible for retail investors to buy when Bitcoin was around about $5,000 a coin. It's now, $105,000 a coin. And it's still, it's just so problematic, even buying a Bitcoin ETF in this country. I had to fill out this form in order to do this test to prove that I am sensible enough to buy Bitcoin ETFs. This is the guy who wrote the first book and knew about Bitcoin when it was 20 cents. And do you know what, Jeremy? I failed the test. Okay. So that's how stupid the FCA is, our government body. They've made it impossible for UK investors to embrace Bitcoin, and they treat Bitcoin the same as fart coin or one of those meme coins or it's just all categorized as crypto, and they don't realize that they're completely different things. Now, at least the US authorities are embracing crypto and all the possibilities there. So that's a good thing. Now, I'm aware that, hardcore gold bugs don't like Bitcoin, and hardcore Bitcoin bugs don't like gold. One is a physical asset, one is a digital asset. Once you understand the difference between the two, I'm a both guy. They're both forms of sound money, and you should embrace both. And we're all on the same team. We're fighting the same battle for sound money. It just really annoys me when there's this sort of big falling out between the two communities. We're allies.
Yeah.
But in any
well
case,
said.
so America is at least embracing Bitcoin. Now, you mentioned the US dollar's reserve currency status. I'm sure all your viewers know about Triffin's dilemma, which is what happens, and especially when the reserve currency is no longer backed by gold. So at least the gold reduces the effect of Triffin's dilemma. But when the reserve currency is not backed by anything except law, as has been the case since 1971, it's inevitable. America has to create dollars in order for the rest of the world to have them. And so the rest of the world makes things to earn dollars. America can just create them. And so it's inevitable that US manufacturing is going to decline when it has this status as US reserve currency. It's like having the global reserve currency causes manufacturing decline. It is a cause of it. Now, the Trump administration seems to understand this in a way that previous administrations didn't. And J.D. Vance actually called the US dollar's reserve status a tax on the American producer. And we all know that tariffs and Donald Trump wants to reshore industry and all the rest of it. But while the US dollar has this reserve status, it is inevitable that manufacturing is going to decline. So if it wants to rebuild manufacturing, which you presume it does because the administration says it does, and you were caught with your trousers down during COVID, dependent on Chinese supply chains for critical goods and so on, for essential strategic reasons, NATO couldn't manufacture arms as quickly as Russia could during the Ukraine crisis. For all these reasons, you need to get and semiconductors and all the implications there. You have to get manufacturing back into the US. Otherwise, you are going to be China's poodle if there's ever any kind of conflict.
Yeah.
So you have to do it. But the only way you can do that is by sacrificing the US dollar's status as global reserve currency. So I think what we're seeing is a slightly managed decline of that position. And so what replaces it? The euro? No chance. Useless. And the yuan? Well, it can't. It's not freely exchangeable. And China wants to keep the yuan price down because it makes its exports more competitive and boosts manufacturing. So the only possibilities are gold and Bitcoin, which are neutral currencies. Now, obviously, gold has a huge head start because it's got 50,000 years. Gold was money even before civilization existed. Stone Age man was using it as money even before we spoke. He was using it as reward, as prize, to store value, and so on. And so there's gold, and there's also Bitcoin, which is digital. So, for example, there aren't the issues with transporting it and so on. So at least gold and Bitcoin are neutral. And China has a lot of gold, and America has a lot of gold. American citizens have a lot of gold. Chinese citizens have a lot of gold. So China and America are both happy for gold to have that role for the moment because it's neutral. Similarly, Bitcoin, the American government has a lot of Bitcoins. China was once the capital of Bitcoin mining. So one assumes there is a lot of Bitcoin in China. We don't know how much the Chinese government has, but there's still Chinese individuals, corporations, and so on will have a lot of Bitcoin. Similarly, American corporations have a lot of Bitcoin, MicroStrategy and all these other treasury companies. American citizens have a lot of Bitcoin. I think it's 25% of American citizens own Bitcoin now, something like that. I read the other day. So whether it's the government or the corporations or the citizens, there is a lot of Bitcoin in the US. So that suits America. So if it loses a bit of its reserve currency power, well, it has to, because it's that power is only nominal. If it doesn't have any production, it has no power. If it loses a bit of that status to gold and Bitcoin, well, so be it. And even so, reshoring US industry, it's going to take, as I say, 10, 15 years. These are all the Luke Groman arguments that I'm reciting, by the way, and I think that guy's a terrific analyst.
Yeah,
but these are the strategic issues that America has. And yeah, I just think the dollar's role as reserve currency, it's almost like an egotistical thing. And we all know, if you look back at the history of wars, a lot of the time it's just two kings went to war because they had big egos, or governments went to conflict and they, the government ministers refused to back down because of big egos. So much conflict over the years has just been because of the egos of the leaders. But I think you can't. Donald Trump couldn't come out and say, we don't want the dollar to be the US reserve currency anymore, because there would be too much lost face. It would be, there's just too much ego there, the American ego and so on. But if you can sort of quietly do it in the background, sort of manage decline, and then it's sort of a bit more acceptable and palatable, if you see what I mean.
Yeah, I do. I see what you mean. And I mean, every empire's money eventually loses reserve status. The pound did. Now the dollar's under pressure, as we see. I mean, if the U.S. is 50 years behind Britain's decline, I mean, what replaces a dollar? Is it a BRICS gold block, a digital system, just fragmentation, no single reserve at all?
Well, I don't think this is a very interesting point. And, gold, even unofficially, is resuming its role as store of value, as a reserve asset. But gold's never been a medium of exchange in the way that silver was, or copper or nickel or so on, certainly not for day-to-day transactions, because there's simply too much. I've got a gold coin here, little gold. Let me find a gold. This is an old sovereign that I'm holding up to camera. And that used to be the pound coin. It now takes about 700 pound coins to buy the old pound coin. That's how much the pound has been devalued by. Now, this gold sovereign is 22 karat gold. It'd be about a quarter of an ounce of gold. It'd be about $1,000, $1,100, something like that. And there's just, it's about the size of a quarter. There's just too much wealth in that tiny amount of gold for it to be a practical day-to-day currency. And that's why we've used silver and so on. And you tend to use gold for large transactions. If you're buying a nice suit or a racehorse or a house or something like that, you might use gold historically. But the way money has gone now, and this is less so in the US, where it's more so in the rest of the world, particularly Western Europe, Australasia, money is digital. Americans use cash much more than the rest of the world does, but it is inevitable that we're using less and less cash, and money is becoming more and more digital. And so that makes the use of gold or silver or any kind of metal as a medium of exchange, it just reduces its possibility because money is digital. Now, you can come along and say, yeah, well, you can just store the gold somewhere and then you can transfer ownership by credit card. Yeah, you can do that. But at that point, gold becomes somebody else's liability. It's not the value in and of itself thing, which is what is so special about gold. You hold the wealth when you have the gold. It's a payment system built on top of gold as a store of value. And so even if the payment system is quality and properly audited and all the rest of it, it's still a third party, a trusted third party. And the whole point of gold and Bitcoin is there's no trusted third party. So this is a difficulty. So we saw during the Ukraine war, Russia bought a load of drones from Iran, and it paid for them in gold. And it flew 3 tons of gold from Moscow to Iran. Now, that's just so impractical. Flying 3 tons of gold, there's so much risk there in doing it. And every time you make a payment, you got to fly the gold. It's just not likely to happen. Money is digital now. Everything is digital. Books are digital. Music is digital. Your contracts are digital. Share certificates are digital. Everything is digital. And this is where perhaps Bitcoin has a role to play, because it is digital money and there is no trusted third-party risk. So I think gold's role is going to be as store of value, as reserve asset, but as an actual medium of exchange, it's problematic. In the gold standards of the 20th century, everyone trusted the Bank of England, the Federal Reserve, at the BIS to a certain extent, and the gold would change hands but stay in those vaults. And it's possible that for Asia, maybe Dubai will have something to do with that, or perhaps Singapore or something like that will carry out the role that Switzerland carried out. But they all rely on trusted third parties. And, you can argue why the gold standards of the 20th century failed. They were different to the gold standards of the 19th century, because in the 19th century, the gold standards involved the handling of physical gold. In the gold standards of the 20th century, America was on a gold standard, but American citizens weren't allowed to own gold. How is that a gold standard if the people can't own gold?
Yeah.
Similarly, the UK and Western Europe went back on a gold standard nominally, but we took gold out of circulation. So it was just a paper gold standard. It was just nominal. It was bogus. And that's why it failed. But so are we really going to go back to a gold standard? I don't think we are, because people don't use physical money anymore.
Right.
But that's not to say that gold isn't going to have a role to play. It clearly is, as a reserve asset, as a store of wealth. But as a medium of exchange, I just, and you can have a digital payment system backed by gold. They already exist. There's like 40 or 50 different cryptocurrencies backed by gold. Nobody uses them because because of the trusted third party element. So this is the kind of conflict, if you like, that's going to take place between Bitcoin and gold. At the moment, gold has this huge head start, but Bitcoin is a digital money that requires no trusted third party.
That's interesting.
And I think that's why it's going to have a huge role to play. And in addition to that, I would also cite the fact that, you know, national currencies are limited by the borders. Even the US dollar is the global reserve asset, but it's still limited by the borders. National currencies are also limited by legacy finance. But if there was a borderless money for the borderless digital world that is the internet, well, Bitcoin fulfills that role. And so there's a scalability to Bitcoin that no national currency has. Gold has that scalability, but no national currency has it. And so I just see Bitcoin as having an enormous strategic role to play. And I don't think a lot of people quite realize how big that strategic role is in the future. But it's because of the fact that it is digital, and that gives it a use case that gold doesn't have.
So even for, you know, our traditional gold bugs that maybe don't understand that or want to kind of argue it, let's just go back there for a second, because that distinction explains why gold keeps coming back as money for governments, not for people.
Yeah. I think governments will favor gold ahead of Bitcoin because governments already own lots of gold. And everyone intrinsically understands that gold has value. It's a human instinct. You know, you ask yourself, when did gold become money? Well, gold was the very first metal that human beings used. We used it thousands of years before we discovered smelting and started using copper tools. I think the oldest copper tools are like 6,000 years, 7,000 years old. You know, Stone Age man was finding little bits of gold as nuggets in riverbeds and hanging them around his neck and using them as jewelry long before he was using metal tools. He was giving those little bits of gold to other people as a reward, as a payment, as a prize, as a tool of barter. He was bashing the gold and making pretty little things with it. You know, gold has and human beings have understood. We intrinsically understand that gold has value. You could take, you know, as the line goes, you could take a time machine to any culture anywhere in the world at any point in history, and you would and they would understand that gold has value. It's timeless. We have it's a basic instinct that human beings have for gold, and it's never gone away. So even though it wasn't official money and we came off the gold standards, people were still wearing it, using it as a store of value, holding coins and bullion and so on. That instinct has never gone away. And that's why gold has a huge head start. And I don't think governments around the world will like the idea of using Bitcoin as money. It's just too big of a leap, a mental leap for them. They'll be like, no, gold is money. We understand that. It's always been money. They can spin it. But they won't like the idea of having to buy Bitcoin and then enrich all these smelly computer nerds and drug dealers and libertarian people who got into Bitcoin early. And you know, they won't want to push the price up for them. That's why a lot of people are resistant to buying it. And governments are going to be equally resistant. Similarly, a lot of people, if you look at people who, I'm 55, and I would say I'm pretty much on the cusp. And the older generation tend to favor gold, and the younger generation tend to favor Bitcoin. So the older generation, which is, you know, people in influential positions in government, will tend to favor gold. But as the younger generation comes through, there are going to be more Bitcoin bugs there, and they'll be more welcoming of the idea of governments buying Bitcoin. So that will slowly change as the younger people occupy a greater space in government. But for now, gold is ahead of Bitcoin in that battle.
Right.
And you know, I think gold has actually outperformed Bitcoin this year as all these narratives have come out. But you know, that won't be the case forever. I still think Bitcoin has an important strategic role to play.
Yeah, I mean, if Bitcoin's the antidote, doesn't regulation neutralize that advantage? I mean, once it's tracked, taxed, ETF wrapped, I mean, does it still serve the same purpose, or has it just been absorbed by that very system it was meant to replace? I mean, I'm curious
Yeah.
because who's actually accumulating now? I mean, is it individuals quietly kind of stacking in the background? Are we seeing the beginnings of sovereign level buying that just isn't being disclosed yet?
Yeah, I don't think we are.
Yeah.
I think we're still a few years from sovereign. I mean, obviously, maybe smaller countries with more dictatorial governments who don't have to go through layers of bureaucracy to make a decision. You know, the El Salvadors of this world, they can embrace Bitcoin, but the larger, more cumbersome countries, unless they get a Bitcoin aficionado as chancellor or PM or something, or president or prime minister, whatever the leader's called, they'll be slower to embrace it. But the you know, you asked, I'm in two minds about the ETFs, Bitcoin
Hmm.
ETFs, I must say, because there's something, you know, a lot of Bitcoiners were like, yeah, it's great that they're introducing the ETFs and that's going to push the price up. And I sort of shared that because I obviously own some Bitcoin. I want the price to go up.
Right.
But one of the main issues of Bitcoin was that it was an alternate system of finance. And so to be trumpeting ETFs and corporate buying and so on, it's slightly, well, that's not the point of it. And the other point is when you buy a Bitcoin ETF, you yes, you benefit from the price appreciation, but you don't benefit from the use of Bitcoin. Like you can't send money from one person to another if you've got it in an ETF. I
Hmm.
can't send my ETF to you. But I could send you a payment now for $1 billion if I had $1 billion, or I could send you for like 1/20th of 1 cent. I could send you a payment. That's one of the beauties and use cases of Bitcoin. You don't get that with the ETFs. I could send you that money anonymously. I can't do that with the ETFs. You know, there's all sorts of KYC, and my broker knows who I am. If I sent you that money, there'd be no third party involved. Well, there is third parties because you've got the custodian of the ETF, so there's third party risk. Um, there's also the issue. There's no anonymity as well. And then let's just say the government wanted, you know, you had a draconian government, there was a fiscal crisis, it needed to confiscate your ETFs, confiscate your money. It could confiscate your ETFs. It couldn't do
Hmm.
that with your Bitcoin in the same way. And so I'm in two minds about the ETFs. I like the fact that it's enabled ordinary people who maybe the tech of Bitcoin is too much of a leap for. It's enabled them to hold it, and I like the Bitcoin, the effect of the buying on the price. But it's kind of, as a purist, it's disappointing.
Yeah, I mean, we look at it, but gold ETFs also changed that gold forever. I mean, they made it easy to own exposure, right, without ever touching the real thing. If Bitcoin's going in the same way, convenience kind of over sovereignty, where does the price rise? I mean, what if the principle dies? I mean, does it just mean that we kind of max out on price because Wall Street's taken over?
No, I mean, I've just been writing an article actually today about the Bitcoin price, and you know, we're at the fundamentals at the beginning of this year could not have been more positive for Bitcoin.
Hmm. Hmm.
Trump administration, pro Bitcoin, new government, the arrival of the ETFs, the halvening cycle, all these things. And, you know, Bitcoin's had a good year, you know, it reached 125,000 at one point. But it's not quite the bonanza year that many hoped for at the beginning of this cycle. And now it seems to be stuck in a kind of range. It went below 100 a couple of days ago, but it came straight back. Maybe just below 100 is support. Maybe that was a false breakdown. You get those a lot.
Hmm.
Maybe it has to go a bit lower. Maybe it goes to 90. Maybe it even goes to 75 or something. I don't know. Nobody knows. I just think we're in another period of consolidation,
Yeah.
sideways. Typically, the magnitude of the crypto winter would tend to reflect the magnitude of the summer which preceded it. And this hasn't been the most, you know, it hasn't been the greatest harvest ever. So you would expect the winter not to be, you wouldn't expect one of those 80% corrections that you've had in previous winters. But I think when markets go sideways, gold went sideways from the spring through till July, August or something. You know, when markets go sideways, it's frustrating because you think it should go up and you get false breakdowns, get false breakouts, and people get caught. And it's the range traders who win out. But I just think maybe it's not just Bitcoin. I think gold and silver are going into one of those periods, sideways periods now. We had an incredible run. Gold slipped below 4,000. Silver's touched 46, I think it did on
Hmm.
Monday,
Hmm.
having been 54. I just think it's just normal. And even the stock market itself looks like it's been an incredible run since the Trump tariff since the tariff tantrum in April, whenever it was. It's just basically just gone vertical, the
Yeah.
stock market.
Yeah.
It needs to just have a period of consolidation and just go sideways and correct. And the hot money needs to cool down a bit. And I just think it's across all asset classes. And so that's where I think we probably are. But
Yeah.
that I don't say that. I like period of consolidation for a few months, but I don't say that with any great confidence because these are markets and you never quite know what's going to happen. But
Yeah.
that's
Yeah.
what I would give the highest probability to.
We throw these out every once in a while. It's like, okay, we got to pivot. I mean, that argument we've heard is Bitcoin's only been around for 15 years, right? Gold's been trusted for millennia. I guess the question is when the next major kind of crisis hits, do you really see capital running to code, or do you think they'll go back to metal?
I think when there's a crisis, wherever there's hot money,
Yeah.
sells off.
Yeah.
So gold is always has this thing as it's a safe haven. Well, gold sold off in 2008 along with everyone else, and every time we've had a big um, uh, correction in markets ever since, gold sells off. Silver especially sells off because there's a lot of hot money in both of those two markets, and they're liquid, so people can get out. And similarly, there's a lot of hot money in Bitcoin. I mean, if I was designing the ultimate bubbly technology, the ultimate bubble, I would design a new technology because there's always a mania around new technology.
Yeah.
But if you design a new technology that is money, it's literally the most bubbly asset you can design ever. So that's why you get these huge up cycles and these huge down cycles in crypto, because it's just the most bubbly sector ever. And Bitcoin's a part of that, obviously. So, if we get a broader market correction, everything will sell off.
Hmm.
But what we saw in 2008 was that gold rallied back first. And I would suggest if we do get a big market, we probably won't get a big market correction because everybody's talking about it. But if we do, uh, I would suggest that everything sells off. But that doesn't mean you sell your gold or you sell your Bitcoin. I would hold on to those because, as I say, in this age of serial debasement and where at a macro level of macro geopolitical level, reserve currency, what's going to replace the dollar at a national level, where we're seeing the debasement of national currencies. I just think all roads lead to gold and Bitcoin, and you want to have a healthy position in both in your portfolio. And when we
Hmm.
go into one of these frustrating consolidations, you do not want to get shaken out of your position.
Yeah, yeah, well said. And I mean, I wonder if, the central bank demand could kind of change that. That's one thing we didn't really have in '08. I mean, that's the perfect setup for your new book. You argue China has over 30,000 tons of gold, but it's not just China. I mean, we're seeing these massive coordinating accumulation efforts by BRICS plus bloc, right? I mean, you've said that there has never been a global reserve currency that did not start out backed by gold. Is that what we're watching in China and BRICS nation build right now? That's parallel gold anchored trade system to operate outside the dollar?
Well, we're definitely seeing de-dollarization, and
Yeah.
the biggest buyers of gold at the central bank level are mostly countries along the Silk Road, mostly countries in the Shanghai Cooperation Organization, not necessarily enemies of the US, but not the greatest friends of the US at the same time. And it just makes sense for them to increase their gold positions and reduce their dollar positions, particularly after the the decision to freeze Russian dollar assets after it invaded Ukraine. And other countries will have looked at that and gone, do you know what? If we hold dollars, we're in America's power. We need to hold something that's nobody else's liability. And that's why they've been buying gold. And I see them continuing to buy gold. They might have taken their foot off the pedal a little bit as the price went up. But if it corrects again, I imagine they'll carry on buying.
Mhm.
Pretty much every major correction in gold since 2022 has been bought at maybe the 50 or the 75-day moving average, somewhere around those levels. It's been bought. So I don't see any reason for that to stop. I think de-dollarization is real, and it will continue. And yeah, and maybe one day they'll be buying Bitcoin as well.
Yeah, let's talk about that U.S. counter move. I mean, if BRICS bloc is making a major power play with gold, I think the real secret history is happening in Washington. I mean, our audience knows the 1934 Gold Reserve Act. The Treasury can legally buy gold covertly. Now I'm looking at this new data from the St. Louis Fed, and it's showing non-monetary gold imports. I mean, in Q1 alone this year, we saw the figures explode to 74.5 billion. I mean, was that just a bank failure accounting trick, or was that the U.S. Treasury?
The story was that was gold going to the US ahead of tariffs.
Yeah.
But I would very much like to know what happened to that gold, and it wouldn't surprise me if a lot of it ended up in Fort Knox, so that the US can declare it's 8,100 tons.
What do you think's happening over in Fort Knox? I keep asking my guests. I mean, we had Ron Paul yesterday, and he still thinks it's maybe just maybe it's been on a margin trade lent out.
There's so much pressure for an audit. The easiest explanation for why there hasn't been an audit is that the gold is not there, or the gold is not of good delivery quality. And Besson says he's seen it, but all 8,133 tons. I think, and obviously America can't declare that the gold isn't there. I tell this joke a lot on podcasts, but I'll tell it to you. The head of security goes to the US president. He says, "Mr. President, there's no gold in Fort Knox." And the president says, "What do you mean there's no gold in Fort Knox?" And the head of security says, "There is no gold in Fort Knox." And the president says, "Double the guard." And
so
but just coming back to your initial point about currencies, nations backing their money with gold. Even though they're increasing their gold positions, I don't see governments actually backing their money with gold to have some kind of gold standard. I don't see that happening because governments are mostly run by technocrats, and technocrats don't like gold because gold limits what they can do. And by backing your currency with gold, you are ceding power. And that's just not in the nature of governments to do that. So while they might accumulate more gold as part of the process of de-dollarization, short of a crisis, I don't actually see anyone actually backing their currency with gold and making it interchangeable with gold. But if China ever gets into some kind of, I mean, China's a trading partner with the US. So essentially that makes it an ally. But if China ever gets into some kind of conflict with the US, the first thing that will get weaponized, as is always the case in war, is money. And China can just suddenly turn around and go, "We've got all this gold. We've actually got 5 times, 10 times the amount we said we had. You don't have any of the gold that you said you have, or you've got half the gold that you said you had." And suddenly the US dollar capitulates and the gold price goes mad. That China's not at that point yet. We must not shine too brightly. It's just not ready for that. It's still accumulating. It's got $3 trillion of dollars that it doesn't want to devalue. It's just not ready for that. But that is a card that it is giving, a trump card that it is giving itself the option to play at some point in the future. We're not there yet.
Right. Yeah. Our time goes too fast, but I still get a couple things to get to because I was going to, on that point, I mean, if China's stacking quietly, is America's silence the tell? I mean, you don't telegraph a gold war, you execute it.
Absolutely. That's one thing you don't do is telegraph it. And, China's sitting pretty. It's the world's factory. Capital from around the world is flooding to China. It knows how to make pretty much anything it wants to make. It doesn't own the IP, but it knows what the IP is. China why would it upset the apple cart? It can just watch the West, all the infighting in the West that's going on. Just watch the West infight itself into oblivion. It doesn't even need to do anything. It just carries on making stuff and selling it. It's sitting pretty. It doesn't need to rock the boat.
Yeah, well said. Okay, you were obviously an OG in both gold and Bitcoin. It's kind of the final three-way race. It feels like gold, Bitcoin, and then the state. I don't know if you saw this new report today. I'm curious, what's the biggest threat to each other? Or do you think it's the private sector? ARX Invest Kathy Wood just trimmed her Bitcoin bull case, citing stablecoins taking market share. Are stablecoins, which are just digital non-state fiat, a bigger threat to sound money revolution than CBDCs?
Well, I think stablecoins potentially have a big role to play because a lot of people you know, they might not. I mean, it's if somebody offered me to pay me in Bitcoin or to pay me in dollars or to pay me in pounds, I'm going to take the Bitcoin every time. But there are a lot of people who don't like the idea of it. I offer to pay people in Bitcoin. Sometimes they prefer to be paid in pounds. They're insane, but that's what they prefer. And particularly with a lot more cross-border transactions taking place, digital workers, remote workers, global economy, blah, 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 you know, you can see stablecoins having a big role. And it might be that people prefer to receive dollars than Bitcoin. Fine, it's up to them. But I think as the stablecoin market grows, so does the Bitcoin market. That, you know, and as the Bitcoin market grows, so does the stablecoin market. I think they both rise together. But stablecoins are definitely going to have a big role to play. I just think CBDCs are doomed. I just don't see how they work. I know, and I think Trump has kind of nixed them in the US, or maybe it was Besson. Somebody's kind of nixed them in the US. But you know, the EU wants to launch them. But if you go like, how can we debase fiat money as much as we have debased it over the last 50 years, and how can the system still be functioning? How is that possible? And, you know, a lot of people must ask themselves that question, and I do. And the answer that I come up with is because of all the architecture that has been built around fiat money, the fantastic payment systems, the fintech, and so on. And it is the fintech is amazing. What has happened, the payments technology and all the other technologies around money, you know, that you can just go into a shop and just go with your phone and you can transfer money and buy stuff. It's just wonderful, the evolution. But there's this huge architecture that's been built on top of fiat money. And I think it's that architecture that has preserved the system. And it's everyone just uses it, and it's because it's a competitive free market. The best technologies have tended to rise to the top and become established, and the weaker ones have fallen by the wayside. And I think that has what has preserved the fiat currency system. It's the architecture built on top of it. Now, CBDCs don't have that architecture. It's going to be something designed by the state. And if you look at any IT project designed by the state in the UK, certainly it's probably the case in America, I don't know, they're almost always a disaster. They absolutely eat up capital and they don't work because often, you know, computer code is very logical and it needs to be given clear messaging. And often the messaging from the state is confusing. And so the code ends up being confusing. And so the system doesn't work. And, you know, you look at any government IT project in the UK, it's almost inevitably a disaster. And so, and the EU is little better. So even if they get, you know, banks and so on to design the architecture for them, it's going to require so much capital to invest to get it right. And then you've got to get people using it. Now, how are you going to persuade people to use it? Well, I use your bank account. Why do I need to use CBDCs? My bank account works fine. And so, you know, there's just going to be this resistance, and it's not going to be like some exciting new tech that you go and see at some tech show. Oh, have you seen this new tech? I'm going to use it. It's not going to be that because it's supplied by government rather than, you know, it's not some robot or some new tech that makes your life better. So it's not going to attract tech aficionados and so on in the way that other technologies do. And so how are you going to change people's habits? Well, you're going to have to spend an absolute fortune to do that. And you're going to have to give all sorts of subsidies and incentives. Oh, if you sign up for a CBDC, you'll get £300 or you'll get your $300 and blah, blah, blah. And, or we're going to pay your universal benefit. What do they call it? UBI, whatever that thing is. We're going to pay you that in Bitcoin, whatever it is. But it's just going to involve spending so much money. Now, you know, you think they sort of justified spending on green energy because they persuaded the rest of the world that the world was going to end unless we spent this money on green energy. But there isn't the same compelling argument behind CBDCs to justify the amount of money that needs to be spent. And the technology, without that kind of subsidy, I just don't see it working. It's just going to be another failed government IT project. So all the guys who are really worried about George Orwell and surveillance and all the rest of it and CBDCs, I think you can sleep. You can take comfort in the fact that you're relying on government to be competent, and governments are inherently incompetent, and it just won't work. So you're safe.
Yeah, that's a good soundbite. I'm going to replay that one. All right. Well, let's sum up on this, Dominic. I mean, obviously, you've traced the rise and fall of every monetary empire through history, from gold to the fiat to digital. When people look back 50 years from now, I mean, what do you think they'll say to find this moment in monetary history? The rebirth of sound money or the last stand of fiat?
I think the rebirth of sound money.
Mm.
If you, I've sort of, I mean, I'm a bit wary about talking about cycles because cycles are so arbitrary. You can look back through history and you can find a pattern and declare it's a cycle. But at the same time, cycles do exist. We have the cycle of night and day, the cycle of winter and summer, the cycle of life. You know, there are cycles. And I've sort of identified a 100-year cycle in money. You go back to the early 17th century and you had the beginnings of, in the UK, of what they called running cash notes. It's what the Bank of England calls them. But these were written documents that were exchangeable for gold. And those sort of came into being in the early 17th century. And then at the end of the 17th century, we had the birth of the Bank of England. And then in 1716, Isaac Newton put England on the gold standard and issued the gold guinea was the gold pound coin. And I write about it at great length in the book there, but it was a kind of an accident. He was trying to put England on a bimetallic standard, but the silver kept leaving because it was fetching a higher price abroad. And meanwhile, there was a big gold discovery in Brazil, and most of the gold made its way back from Portugal to the UK. And so there was increased gold supply enabled that gold standard. But you've got beginning of the 17th century, running cash notes, beginning of the 18th century, Newton's gold standard. Then at the end of the 18th century, in the Napoleonic Wars, Britain came off the gold standard to print the money for the wars. And we had the great recoinage in 1816. So 100 years after Newton's recoinage in 1716. And then Britain returned to the gold standard 1821. Glorious age, Britain in the 19th century, our greatest period in our history. Britain's contribution to industry, to invention, to the arts, to innovation, to business, just a wonderful period. Enabled, by the way, by the gold rushes of the mid-19th century, first in California, then Australia, then South Africa. All the Australian and the South African gold went back to the UK because it suited us. Yeah. But anyway, beginning of the 20th century, 1914, beginning of the First World War, Western Europe, Germany, France, the UK, effectively abandoned their gold standards to pay for that war. We tried to go back on, but it didn't work. They weren't proper gold standards, we've said before. So you got 1716, 1816, 1914, and here we are 100 years later, and we have the birth of crypto, 2009, 2008, 2009, the birth of crypto, and its gradual infiltration into the world. And we also see fiat dying something of a death. And, you know, the debasement trade, that's now in common parlance. When I used to write articles 20 years ago, every time you use the word fiat, you would have to explain what it meant. Now it's just in common parlance. Everyone understands fiat. And we have Bitcoin to thank for that because it's been the most incredible educational tool. Everyone goes to Bitcoin to speculate in it and make money. And of course, I went to gold originally to speculate and try and make money. But in investing in gold, I learned about sound money and limited government and all that. And the same thing happened to a lot of people with Bitcoin. And so even though there is probably, with the exception of Argentina, not a single libertarian government in the world, I would say libertarianism, small government, is very much the belief system of the internet. And that's the most international kind of system that most people, the majority of people around the world embrace, even though it hasn't got a working majority in the legacy government systems around each individual country. But in any case, this is all part of the monetary revolution that we're going through. And we, you know, there's the reduction of the US dollar's global reserve currency status, the reemergence of gold as a reserve asset. All these things happening in tandem with each other. We're going through a monetary revolution, you know, as you and I are speaking. And yeah, I'm sure in 20, 30, 50 years time, there might not be the landmark date like 1971 or something, but it's, you know, these landmark dates are just tools that people use to write history. The actual way things evolve is actually a lot more gradual than that. You know, the US was leaving the gold standard from as late as 1949. You know, that process of printing more dollars than it had gold, that began then. But even though the actual date was 1971, the process took many decades. And we're going through one such process now.
Yeah, it's wild to watch. Of course, we've been reporting on it all year. People, mainstream media, is starting to get that debasement trade, as you call it. We'll leave it at this. I mean, if we're in that 100-year reset, people watching right now are asking one thing. I mean, what do we do to protect ourselves, right? For the ordinary saver or investor, what's the practical move today to preserve that kind of real value when the system itself is shifting? And is it about allocation, not owning, or owning gold or Bitcoin as insurance? Or is it more about mindset, kind of getting ready for a world where money itself changes form?
Well, I'm not a sort of guns and tins guy. I don't think we're going to go into a Mad Max scenario. It's possible. Like I went to LA last year and we went. I took my kids. They wanted to see Skid Row, so we went down Skid Row, and that was pretty Mad Max. But for the most part, I don't think we're going into end of day scenario. But you can't be too careful. But as the world's getting better, technology's getting better, lives are living longer, everything's good. Even if the systems of governance are antiquated and not moving as forward as quickly as technology is. But I just don't see how gold is you could say that gold wasn't a good asset to own in the 80s and 90s because it declined in price. But I actually don't think that's correct, because that 850 price that gold hit in 1980 was an illusory number. It only went to that price for one day, one afternoon on a spike. But I just think gold is a perennial asset, and everyone should have an allocation. I often say this to my readers, and I thought it was an old Wall Street saying, and I Googled it, and it turned out the person who coined it was me. But the expression is put 10% of your assets in gold and hope it doesn't go up. And there's a good rationale. I would own gold. I would own Bitcoin. If you're a Bitcoin guy and you don't like gold, I would urge you to get over yourself and own a bit of gold. If you're a gold guy and you don't like Bitcoin, I would urge you to get over yourself and have a bit of Bitcoin. Own both. All roads lead to both. And if you're a speculator, then you can play the game with silver. You can play the game with miners. They'll have their time in the sun, then they'll have their declines. You can play the game with shit coins and treasury companies and all that kind of stuff as well. But the core ownership assets are Bitcoin and gold.
All right, we'll leave it there. Dominic, of course, brilliant conversation. Truly appreciate the deep dive. The new book is The Secret History of Gold, available
Jeremy,
now. Yeah.
No, it's not. It doesn't come out in the US until next spring, till May, I don't think. I think you can pre-order it, but it doesn't come out in the US till May. But it is available elsewhere. And but if readers want to subscribe to my Substack, I'd be very grateful. Come to theflyingfrisbee.com and join my newsletter. There's a free option and a paid option, but theflyingfrisbee.com, and we've got quite a few US and Canadian readers, but I'd love to have more of you. So flyingfrisbee.com.
Theflyingfrisbee.com. I'm going to go and sign up for that too. Apologies on the book. Excited. You got to send me a little pre-release. I want to get a little take on that. We'll have you back when that book's released. Appreciate this.
Thank you very much. I will do.
Thanks for your time. Of course, we got lots to get into all week long here at Kitco News. Don't forget to hit the subscribe button. I'm Jeremy Szafron. For all of us here, thank you for watching. More great content to come up.